Hi guys, this is Dennis, the Active Trend Trader. Welcome to today's session. We've got several stocks to take a look at, plus awesome tip at the end of today's video. So keep watching to the end. This is how to make money trading stocks. But first, I'm going to put a link up in this corner up here, tell you how to get in on AutoPilot trading. That's our service that sends out pre-flight checklists for up to 7 stocks and ETFs every week, showing you how I'm going to trade it, where I'm entering, where I'm exiting. You don't want to miss it. Give it a test flight for 3 months and see if you like it. Aloha. Let's get into today's session right now. Okay, good day, everybody. This is Dennis Wilburn, the Active Trend Trader. I want to welcome both Anil Parikh and Steve Farrar to today's session. Gentlemen, again, the second week of 2022 is in the bag, and I know I'm keeping much of my powder dry. I have a very little actually invested. What about you guys?
Same thing here. Likewise, I did get fully committed a few days ago, and then I mostly back out again.
Yeah, that's one of the things I really love of the way you trade, Steve, is that you have and this is the mental strength to get in almost totally, but then say, hey, you know what, I was wrong, and then pop right back out. I mean, yeah. And that takes mental strength, because some people would sit there and be all ticked off at themselves for potentially being wrong or whatever. But that's really awesome.
Thank you.
So let's go ahead and jump into.
It's been years developing.
Yeah, I know what you mean. And so, hey,
maybe we should say decades.
I hear you. I got to thinking about it. I've been doing this since 1992, and when I subtract 1992 away from 2022, that's 30 years. Yeah. And so, whoa. And so, anyway, hi, this is Dennis Wilburn. Welcome to How to Make Money Trading Stocks and Options, plus a trading tip. I've got an awesome trading tip for us today. You're going to be surprised, but it'll help you with, as Mark put in the comments there, the slop and shop. We are still working on wanting to streamline the process for this webinar. I'm going to try to keep it to 15 minutes. Let's see how well we do. So we're going to do a market index review, stock picks from our elite traders. We've got some good ones today, and sometimes we have to remember that sometimes the pick of the week is just to stay in cash, and there's a reason for that. But I've asked both Steve and Anil to cover just briefly, when we get to that point, of what do they do to stay ready when the market's not cooperating. And on my trading tip, as we said, we'll save that for close to the end. And then I've got 3 entities that I want you to take a look at. I'll save that for the very, very last. So, again, a simple ask from me to you is invite your friends who could benefit from better stock picks to this webinar. It is free. And the fact of the matter is what we put out is worth a lot if you are a trader. So how are we doing for the I love this, and I thought it was apropos for this weekend. If you don't know precisely what signal is yours and how you will size and manage your positions, stop trading. And that's put out there by Peter Brent, who's been doing this for a long time. I really don't have a P&L to put on the board for 2022 yet. I usually don't put that out until after January is done. So that's here's where we were last year. But I do have the P&L, or where we're sitting as of there we were last week. This week, did a little bit better. As you can see, the indexes themselves have actually kind of continued to fall a little bit. And active trend trading, we've picked back up. I'm really pleased. I've had a lot of trades that have kind of been what I call round trippers. They are whipsawed out very, very quickly. And for 2, 3, 4% losses. But the thing about it is, because of position sizing, because of the way I position size, I'm only impacting about 0.7. So I'm not even down 1%. And that's another way to manage when the market is going sideways. So let's jump in and look at some charts. That's what we're here for. So let's get started with the S&P. S&P actually did a really nice job this week. Here was Monday, Tuesday, Wednesday, Thursday, Friday. We had a hammer on Monday after basically gapping down and then falling down to support about the 100-day moving average. Now we've had a cycle back up. This was a rally attempt that failed. We are now moving back down. How far down are we going to go is, I would say, anybody's guess, but those of you who know that I love to do Fibonacci's, what's a downside target for this? And the very simple answer to that is you lay in a Fibonacci extension, you take that last move down, pull it back up to the last move high, and that gives us a downside target of 449 on the SP on the SPY. Does it correspond with a level of past support? It does. And so that's a good target. I look somewhere between the 78% retracement and the 100% retracement and the 127. And so that's how I project down to the downside. What is our indicators telling us? Momentum has not shifted to the upside yet. So continue to look for downside moves. I would say any price action that takes you back up into the moving averages may give you the opportunity to do a bearish trade on this. Same thing on the weekly charts. Very weak looking. This does not, I would like to be more bullish, but I'm not. And the reason why I am not is I think this market could very well be on the precipice of falling over the side and really hammering a lot of people. Now, that'll give us the opportunity, short term, or sometime this year, perhaps, to jump back in and for some nice gains. But right now, hey, guys, we're stuck. We are in a downtrend on all of the indexes, the Qs, similar type thing. Beautiful move. I mean, this is a classic bearish move. Three days up, hits the moving averages, reverses down, and with the active trend traders on the AutoPilot, we actually were able to get in a trade on SQQ up when this got up to this area, and SQQ has delivered for us really nicely. The SQQ is the inverse of the NASDAQ, and so when the NASDAQ's going down, the SQQQ is going up. As you can see, momentum still looks crappy. Momentum on the weekly chart, which has longer term implications, is still looking, poorly, and it's just looking weak, And so IWM, similar situation. Now IWM gives me reason to kind of pause, and the reason why is we're right back down at past support that is held going back to January of 2021. Could we get a bounce, a tradable bounce off of these support levels? Potentially. Where might it go? Well, I would say what happened last time. Came down here, bounced off the 209 to 208 level, ran up to 225. And that can, if you can get a entity trending like that, where you've got a nice little move back up here. Okay, that's 7, 9, 8%, and you trade the leverage ETF on it. That can be, on this one, you could trade both directions on the leverage ETF. Buy the TNA when it's going up, buy TZA when it's going down. So give you some excellent opportunities with the with IWM. I think the Russell is closer to a buy, but at the same time, we still don't have the reversal on the momentum. My research over them, my restudying over the Christmas 2 weeks revealed that waiting for the momentum shift is critical to basically reduce the amount of whipsaw you may have with the trade. So, guys, that's what I've got. What do you think?
I don't disagree. I think the markets are sloppy, choppy, difficult, horizontal, congesting. My sense is the Nasdaq is the leading market, and is right now looking the weakest. So I'm feeling that we've got some potential, good potential for downside. Although either way, we've not broken. It's not clear what the next direction will be.
Right on. Yeah. And Anil?
That same thing. My system is giving me sell signals on the indexes on the daily chart, but the weekly charts are still intact.
Oh, okay, that's very interesting. Barry asked a question. Price is just above the trend line. Yes, it is. Or I've got it at, right about the trend line. From October, that goes back to October. Bounce or no bounce next week? I don't know.
Yeah.
And the same on the Q. But I think what you do in a situation like this is you err to the weakness or to the lower levels of support, so that on the spiders that would be down at the 456 to 457 level, all the way down to 451. Those are your lower levels of support. But this is looking very classic, that this was a rally attempt that's failed. What tends to happen then? You get a drop at least back to these lows. We take out these lows or even that low. Watch out, be low. So sorry for the terrible pun there. So okay, let's jump into our stocks, guys. Let's see. Let's start with now, Steve. I'm going to start with you because I know you are not going to be you are not ready to buy, but you did provide me a stock that you're looking at that you like, but you're not going to buy it yet. But just kind of walk us very briefly through your process of how do you be ready for when the market gives you the signal to go.
Sure. Well, I'm looking for stocks like this, for example. It's in the banking sector. The banking sector has firmed over the last month or so, month and a half.
Right.
And typically, in a good market environment, I'd be a buyer of this today. But given the uncertainty with the market, I'm choosing to wait until that gets a little bit better known. And what I mean by that is that, to me, the market is most healthy when the Nasdaq is strong, because the Nasdaq represents the biggest part of our economy.
Right.
And as long as it's weak, I think it's a weak environment.
Okay.
The S&P looks fairly strong. I agree with your analysis, but it's the strongest looking of all the indices. But the Nasdaq is clearly weak.
Right.
It's technically, by definition, in a downtrend. And until that reverses, I'm not interested in being long stocks.
Okay.
But I'm looking for stocks like QB. When the market environment shifts, I'll be trying to take advantage of stocks like using stocks like.
So you won't even nibble on QB.
I will not.
Even until the market turns around.
Correct. Until the Nasdaq holds or strengthens or clarifies its environment, I am not going to be trading anything.
Okay.
Since November. I've been in and out like 3 cycles, and I've made money, but it's been a tough slog. It
has. I mean, you've earned the money that you've made.
more than earned it. Yeah.
Okay, Anil, you gave us Taiwan Semiconductor. I like it, but I have some concerns. But walk us through what you got here.
No, I picked it up actually physically yesterday, but my system had given a signal about a week ago. And before the earning, now when the earnings came and it popped, I decided to get in.
Okay.
Good move.
Good move. It looks like, and where's your, where will you know you're wrong?
It will have to drop, let's say, around 135-ish.
Okay. So back inside the breakout area. I like it. So what, and again, same question that we asked Steve is when when you know the market's weak, what modifications do you make to your trading? Like on TSM, when you bought that, did you take a full position or did you take a partial position?
Two things to answer your first question first, and that is in the Delaware focus list system, my rank number 1 is the toughest screen.
Mm-hmm.
I have go through between 1, 2, 3, and 4. And in a tough market like that, I accept only if it passes my toughest screen. So this passes that, it's ranked number 1. And since the market is tough, to answer your second question, yeah, I took only half a position.
Okay. And so again, working, and I try to get that across to people. Those are decisions that are made by both Steve and Anil before they actually get into the trade. So that then there's no second guessing. There's no, there's no confusion. You've made your decision. And when you've made your decision to go with your rules and the way they work, it helps reduce the overburdensome effect of emotions on your trades. So here's one of the things that I like to do. I'll just share it with you really quick. I like to project up like this. There's a couple of ways you can do this. I did a Fibonacci extension here. This was from this defined move from here to here, back down to here, bounces up. As you can see, it rallied up. This is the 127 extension, and there's the 100%. So it did achieve the 100%. I would then go back and also take a look at this and go, well, what else? What else might we want to look at? Also, I would take a look at this from this move, from this longer term move here, because that's what would show up on a up to there, back down to there. Isn't that pretty remarkable? Yesterday's high hit almost exactly at the symmetry move from the low of 1220 to the high of 1.4. Hit it almost exactly. And guess what? The sellers were sitting there waiting to push it back down. So that's interesting. That's good stuff.
Dennis, if I can make a comment in terms of
you
how
can.
I trade. Relative to you or Anil, I seem to be more all in or all out kind of an trader.
Right.
And part of and I don't ease in. I'm either in or I'm out. And part of the reason for that is I'm 95% an options trader.
Right.
So I don't want to trade an option until I'm pretty confident about the environment. So I tend to be in aggressively and then out aggressively if the environment changes. And it's when I'm comfortable with the environment, then I will, get more regular about being in and out of positions and making sure I'm fully invested.
Okay. Which makes a lot of. So is the TSM gap strength or weakness? Well, that's a great question, Dorothy. We'll get back and just answer that really quickly. Since it basically, look over here, it did move above this level here. So I would definitely say, and look at the volume here. People, what's really funny is all this higher volume going into earnings. People knew something was up. So I would say that something behind TSM is giving it some strength. So so how do you, in a environment like we currently have, how do you basically account for the wide and volatile daily range that oftentimes makes it very challenging to find a place to buy the stock. Here's a stock we did with the AutoPilot top 5 list back in December. We actually came in and over the weekend here on the 17th, projected to buy it at $26. Well, why did we do that? Well, because this was actually a pretty good pattern, but why did I put out the order to say, hey, we're going to buy it, but we're going to buy it down here at 26? What I did was go over when you get, sloppy price pattern, and it can be a lot more sloppy than this. Go to your weekly chart. Oftentimes what will happen on your weekly chart, it will calm down the volatility. And the 17th, or actually the week before, this was the week of the 17th, the 13th through the 17th. What did I see when I looked at that particular candlestick there? Well, what I saw was a couple of things. One, over the last few weeks, it was respecting the 20-week moving average. So I did an estimate of where would the 20-week moving average be this week. That's what allowed me to pick out $26 there. As you can see, that low there was $25.85. So I gave it 15 cents. And I said, next week, the moving average is going to be up at approximately, and as you can see on the 20-week moving average, it was up at $25.89. So fudging it just a little bit, I said, okay, that's where I want to place my order so that during the week, it could bounce off of that level, which corresponds to that entry right there. So again, see how it, this picture of this stock looks so much better over here than trying to figure out all this, spaghetti and junk over here. And so that's, go to the weekly chart when you're getting a very volatile and wide range daily chart. It will help you out dramatically. So I hope that's a good tip for you. And
it's very good, actually.
And so because that way I can target shoot. I can target shoot based on a longer term chart, which tends to have more influence over the stocks, have more influence or be more significant is what I should say on the price pattern. So here's my choices for this week, guys. And I'm going to just throw these out here really fast. ACLS, I really like. It is strong. It's number one in its group. It's its momentum on a weekly chart our daily chart is starting to turn back up. And again, a strong chart. It is holding up above the 50-day moving average, even though the indexes are struggling. So look for a move back up. Here is my target on this. It's up in this box up here. If you want to know how I got this box up here, go over to Mike Lamont's Mara Wealth on YouTube, and you can watch the video we did yesterday, and I'll tell you exactly how I got that. Or you can just go YouTube Market Tech Talk, and I talk about the projection of both price and time, and that does protect. That's my price and time target. So if you want to know more about that, hey, go on and check that out. So that's one. Another one. This is a risk-on trade coin. Coin has come down. This hammer right here off of this support level is still valid. So we still have a bullish signal. However, price action ran up, ran down. Let's see what happens in the testing. I'm going to be putting an alert down here about 216 on this one, anticipating that coin is eventually going to break back out. Now, that's where, am I buying today? Heavens, no. I want to get that as close as possible so that my risk is as low as possible to the bottom part of that wick on the candle. And then last but not least is another way to avoid, there we go. Another way to avoid issues or with individual stocks during crappy markets is go to the indexes and just trade them. Just trade the ETFs or the options. I wish when I was learning how to trade that we would have had ETFs, because I think that they are a real godsend. And a person can actually trade ETFs and never have to trade a stock. Again, as I put earlier, I like it down here off of these support levels. Do I want to buy it right where it's at right now? No, my momentum hasn't shifted yet. However, it may get down to 210 or it may get down to 208. It may overshoot it. Give me positive divergence. So that's what I've got going. What do you guys think? Those are, again, I wanted to load it up with a real quick review. But there's 1, 2, 3, 4, 5 options to at least considered and to watch.
I like what you said. I agree with it completely.
Anil?
No, looks good. Looks very good.
Okay, guys. Well, unfortunately, I got too verbose and we didn't get it to 15 minutes, but that's okay. Just a reminder that all the materials we do present are for trading purposes. Traders should always pay for trade any new method prior to the risk of their own personal capital. And again, 2022, I see 2022 as a year of survival. And you're going to need patience. You're going to need persistence. I want to thank both Steve and Anil for being on the webinar today and everybody else who joined. And again, if you do have questions or if you're watching this on YouTube, please, basically subscribe, hit the like button, leave some comments, ask some questions over on YouTube. I really appreciate that. I want to thank Dorothy for the comments that she's been leaving over there. I appreciate that so much. So until next week, I just will say aloha, trade well, prosper, happy new year I'll probably say that until the end of January. So God bless, gentlemen, and we'll talk to you next week. See ya.